Hey guys, it is Gusty Winds here again. First of all, apologies for not having made a video in a long time. I've been meaning to, but just haven't found the time to sit down and do it, but for whatever reason, this weekend I decided I would. What I'm going to do in this video is give you a bit of an update on how the stocks from my portfolio in that June video have performed, and then I'm going to walk through one of the other stocks which I've bought and in the meantime. And kind of just give you a little bit of an overview of how I thought about that. I'm not going to update you on my current portfolio just because I don't have time to do that yet, but I plan on doing that in the future when I can find a little bit of time to prepare. So if you've watched the last video, the June portfolio update, you'll remember these are our stocks. If you haven't watched that, I'll put a link in the description so you can go and have a look, and it'll give you a little bit of an explanation around what I was looking for in all these stocks and why I own them. And here shows the price on June 9th when I made that video, and here's today's price and the returns that I've made on those. So you can see Bethesda, which was my biggest position, it's done quite well. LP, which has been one of our better performers. Interval, Western Fraser, the lumber stocks, it's all sort of the same trade. My US housing thesis, done quite well. Global Atomic, that's my uranium call, which I've kind of harped on about a bit in the past, done really well. And Victoria Gold, I didn't really talk about that much because it wasn't actually my idea, but it's gone up a little bit, which I'm happy with. So yeah, I mean, you don't always get those sorts of returns, but we're in the right places, and it's been a pretty nice market environment for stocks. So pretty happy with the outcome of those stocks, and I think even some of them have still potentially got a little bit more to go. Like, I still quite like West Fraser. Anyway, but that's a different topic. So what I'm going to do is walk through a stock that I bought in August last year called Amada, and this isn't a stock pitch because the stock's moved, and actually I think I'm probably going to sell it soon. So don't take this as rush out and buy Amada. It's absolutely not what I'm saying, but what I want to do is walk through sort of how I came to the decision to buy. Now I'm not going to go into the whole case of the stock because I simply just don't have time to do that, but I'll give you kind of some of the key things that I look for in determining that I thought it was a good risk reward. So Amada basically is a Japanese machine tool manufacturer. So they make mostly cutting tools which are made in manufacturing. So they'll be made in making cars, bikes, motors, any sort of pumps or anything like that that you would sort of find in an industrial world. They use machine tools for manufacturing, and these guys are one of the leading manufacturers globally. So it's an okay business to be in, not really a growth industry, but if you can bring a good product to the market, you will get paid for it, despite the sort of cyclicality in it, because it tends to ebb and flow with the cycle a little bit. But I picked this up not too long after COVID, so it was in August when things were still sort of shut down. The stock was trading at 860 yen. I've got a trade confirmation here from my interactive brokers in case any of you guys are sitting there saying, I'm making things up. Here's a market cap, which is just the price times the number of shares outstanding, so that's how much it will cost to buy the whole company. And then enterprise value is not super important, but it's essentially the same thing minus the cash plus the debt. Here's a snapshot of the balance sheet from in the last period before I purchased it. I'm not going to walk through this individually, so if you don't understand accounting, I apologize. But what you'll notice here is that lots of assets, not much liabilities, almost no debt, apart from a little bit of short-term borrowings, but lots of cash on the balance sheet, a fair bit of inventories, some receivables that should come through in the next 12 months, and then we've got some other financial assets in there, which is marketable securities, so stocks and bonds and so forth, which can be sold in the market with relative ease. And so, what we notice actually is that if you take all of the assets and you subtract the liabilities, and I'm just talking about liquid assets, so this is just the working capital and stocks that you can sell. I'm not including any of the property, plant and equipment, anything that can't be sold in a liquid market straight away. We got 766 odd yen per share in value, and that's if we went into the company today, took everything, sold it and shut it down, obviously not including the PP&E. That's how much we would have. So that's only about 10% below that 860, right? And so if we look over to the income statement now, this company is actually consistently generating free cash flow and earnings. So, from March 2015, that was a bit of a soft year. I think it was a bit of a manufacturing recession. But beyond that, 27, 25, 30, 33, 23 had a bit of a dip in 2019. That's trade war related, and then obviously COVID kind of got hit, but it's bouncing back now. It's constantly generating money, so there is value to this business, and it's trading almost as though it's got no value, because it's basically saying, you're not worth much more than, if you just liquidated the whole thing and took your money back. So market's very pessimistic about this thing, or at least it was when I purchased it. Here is a chart of valuation, which is kind of the third thing I look at. So you can see the P over time. It's kind of stayed between 20 and 15 for a lot of it. It kind of dipped down here when, just below 15 maybe for a little bit, and above in sometimes. But generally 15 to 20 seems like the right multiple for this through the cycle. And you can see the earnings are kind of between 25 and 30 in that range over time. So what I have basically done here is said, well, if we get a low earnings of 25, which is kind of where we troughed out, and a low multiple of 15, which is sort of where it tends to trough. It does go below, but that's only when the earnings are very high. So if you have high earnings, you generally get a lower multiple, and vice versa. We're looking at about a 25% return there from the current price. So okay, and then the high is obviously the reverse of that. So high earnings, high multiple, maybe 100% upside. Now this is a range. I don't think that it's going to get that high, and I think that it's worth more than that. But that's sort of where we could see the stock price landing. Now our downside is that this thing shouldn't trade below 767 or 766, because at that point, when it starts to go below there, someone can come in and just take the company without doing any business, sell everything, take the cash, shut it down, and make money. Now that's not always realistic, particularly in Japan, because the corporate governance there is it's a lot different to in the West, and you tend to have large shareholders and stuff like that. So it makes it hard to actually be an activist over there. But in theory, it shouldn't happen, particularly for a company that's just actually profitable and does pay a dividend. So you will generally see that as kind of a flaw in the stock. And if you look at the stock price, it kind of was, it went down to maybe it went down to 740 or something, very briefly dipped below that, but kind of troughed out there. So we bought this in, what was it, the 12th of August last year, which was here somewhere, 860, and it's done reasonably well. It's 1233 now, so call it 40% or so. Been a nice little trade, but yeah, I hope that was kind of a good snapshot of what I've been looking at. Obviously, there's other things that you look at in terms of business quality and some data stuff that I track, like machine tools and capital spending and so forth, which I haven't gone through here, so that's not the extent of it. But in terms of kind of getting to the decision of, okay, how much money can I make here, and is this a good investment? That's kind of where I come out, and these are the key things that I look at. So I hope that was useful for everybody. I'm going to try and be a bit more frequent with my videos, but let's see if that happens. I've said that in the past. So thanks everyone, and if you enjoyed it, let me know. The feedback is always appreciated. Thank you.